Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He is co-founder of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
I'm doing awesome.
Great. It's wonderful to see you. I always look forward to our time together. I look forward to the information that you share with the viewers at home.
Well, hopefully I can impress you again today. So.
I am confident that you will. So right out of the gate, I just wanted to talk to you about a little bit about what's going on in the market right now. How's the stock market performing?
Well, I mean, the reality is that we are just in a crazy environment right now. The market is seeing incredible amounts of volatility, up and down. We're seeing incredibly low interest rates again. And, people are concerned. I've gotten more calls over the last couple of weeks than I have in, the previous 6 months. So, people are concerned and they want to just make sure that things are okay, because a lot of times our clients are getting their information from one of the, cable news networks where all they do is talk about finance all day, every day. And just remember that your portfolio doesn't necessarily reflect what's happening in that market from a volatility perspective. Our clients, for example, are saying, hey, the market's down 2%. We're concerned, but they're not down 2%. So oftentimes, people will see the stock market, the S&P 500, and assume their portfolios are doing the same thing.
What about taxes, Stewart, overall? Let's talk a little bit about that this morning. A lot of people are probably thinking, are they going to go up in the future? What's going to happen with taxes?
Well, I think when it comes to taxes, I mean, absolutely, taxes are at the highest peak in the lowest they've ever been in, and we anticipate a massive correction from a tax perspective. So Biden has been very clear that he's going to be increasing taxes for the higher income earners. Now, the problem is defining who that is, right? They float out information every once in a while about how they're defining it. For example, during the election, we were told that nobody that makes under $400,000 a year will pay a single dollar in additional tax. Well, now they're saying that's for married couples, right? So they essentially cut it in half for individuals, right? So now they're at $200,000. So we don't know yet. We're still waiting to see the complete plan, what happens through budget reconciliation and so forth. But taxes are low, and if you're not taking advantage of today's tax environment, it's a major problem.
Absolutely. Stewart, I should also ask you, just looking at someone's portfolio, if you will, going back into just portfolio management, a lot of times are people paying hidden fees that they're not even aware of?
Yeah, I think the one thing that we're seeing from clients is that they just don't know what they're paying, I think our show has actually, stimulated a bunch of people to start asking that question of their advisor. But, very frequently we see clients that come in and say they have no idea what they're paying whatsoever, and they have substantial assets. I think that's a major issue. Even if it comes to a fee, like an advisory fee, that's one thing, but there's tons of other fees that are hidden inside there, like, loaded mutual funds, for example, or 12b1 fees, or custodial accounts, or transaction costs. There's a lot of additional costs that add up on the fee level that you really need to be aware of.
So basically, a lot of times, Stuart, when people are coming in to meet with you and Judd, they have no idea what fees they are paying until you can actually do a portfolio x-ray, if you will.
Yeah, well, not only do they not know what fees they're paying, they also don't know what kind of risks they're taking. One of the things we talk about with our clients is making sure that they understand where we are in the stock market right now. And if we have a slide for you to show you where we are in the S&P 500 index right now, and if you take a look at this slide, we are at the highest point in market history, plus or minus a couple points. So it's really important to understand that we're closer to the end of this market than we are to the beginning, most likely, right? I don't have a crystal ball, at least mine doesn't work very well. But, you have to ask yourself, what am I comfortable losing if the market pulls back? Because in 2000 and 2008, as you see in this example here, the market lost 50% plus. Right? Are you willing to lose half of your life savings? And some people just don't realize it, right? We've been on this amazing tear in the market, and people are just comfortable because they haven't seen substantial loss. And the trick with COVID, when COVID happened, yes, the market was down 32%. But if you look at the timing of it, most people didn't see it in their statement because it happened within the month and we had that massive V-shaped recovery. But if people literally saw the full loss on their statement, we would have had a lot more concerned people that were, concerned about their positions. Fortunately, we took a tactical approach and we were able to basically avoid a lot of that downside in most of our portfolios.
What advice do you have, Stewart, for the do-it-yourselfers, if you will?
Well, I think do-it-yourselfers are great for one reason. Let's talk about tax, for example. Well, when it comes to tax, I think that if somebody does their taxes on QuickBooks or Quicken or whatever, they're like the CFOs of their own estate. So I think they're very in touch with what's going on. I think the problem with it on taxes, do-it-yourselfers for taxes, is that, quite honestly, they just don't have any perspective, right? They can't see the forest through the trees. People only understand what they know. And so what we do is we embrace those people, because I have a lot of, we do have a tax office and we do taxes, but it's not a profit center for our company. It's basically a planning center. And the purpose of that is to make sure we understand how to be the most efficient we can for those clients. And oftentimes I'll have a client that wants to do a portfolio review, but they say, hey, I do my own taxes. I don't, keep your hands off. This is what I do. That's okay. We always have our enrolled agents or CPAs review their previous tax returns. And then if they become a financial client, and what we do is we enter all their data, their work into our software as if we did it, and then we can continue to model moving forward. So, I think there's some pluses and drawdowns to people being do-it-yourselfers.
Sure,
sure. On the investment side, let's say, when it comes to investments, well, that's different than tax. And what we've seen for these do-it-yourselfers that have decided to kind of manage their own portfolios, just remember, when I showed you that slide earlier, the market has had a tremendous run. We've had 12 years of massive market returns. So when somebody says, hey, I've tripled my money over the last 10 years, well, great, the market, multiplied 5 times. So you only got beat by the market by a factor of 40%. So just remember, everybody's making money right now. The question is, what plan do you have to exit if things go wrong? And a lot of people, Cynthia, historically what they do is they just say, oh, I'll go to cash. Well, the problem with going to cash, what if you did that during COVID and you're down 20%, you go to cash, market drops another 10, but then it has this V-shaped recovery and it's too late to buy in, right?
Sure.
So that's why it's important to make sure that you have somebody that is not only a fiduciary, but somebody that has access to multiple money managers. What I tell people all the time is that if your financial advisor, for example, is the guy picking the funds himself all by himself, that's a problem, right? That's the same problem we see with individuals, right? I think most individuals and most advisors who are picking funds can, do similarly well in an up market. But what we say at Asset Preservation is that, no, we want some private money managers to have a different perspective, because everybody knows you should have a diversification of your underlying investments. We all know that. What we say at Asset Preservation is that you need to also have a diversification of perspectives reflected in your portfolio. Now, here's what I mean. Let's flash back to November of 2020. Okay. And remember, what was going on then? We had the elections going on, we're in this divided country. Half of America believes that if Biden wins, the market's gonna crash because of higher taxes and higher regulation. The other half believe it's gonna crash because if Trump wins, then we're gonna have riots in the street and that's gonna collapse the markets. Well, guess what? Some people decided to go defensive, and I had more calls leading into the election than I had ever had, literally in my entire career. Why? Because people were scared, right? And when I let them know that, hey, we're fine, we're good, that's all they needed to hear,
absolutely.
Right? And I think, just remember, one of our money managers, for example, when it came to the election, decided to be defensive. They didn't want to lose any money, so they went into a defensive posture, and they were actually up 0.68% in November, despite the fears of a massive crash. Well, one of our other money managers, who is a more strategic money manager, actually hit the gas. They believed Biden would win and there would be infrastructure bills and all of these other stimulus programs, and we'd have this, V-shaped recovery and the market would continue to run. And it did, and they were right. The point I'm making is that oftentimes people are being advised by a single money manager or a single stockbroker that's picking the funds. That's one person's point of view on the market. What we do at Asset Preservation is diversify the perspective so that there's multiple money managers, that you don't want to have all your eggs in one basket, not only from an investment perspective, but from the perspective as well.
Absolutely. Well, Stewart, this is the perfect time for us to open up the phone lines. Would you agree?
Sure.
To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We know you have a lot of questions about how to plan properly for retirement, how to plan for a comfortable retirement, perhaps just needing a second opinion. What Stewart is offering you today is the opportunity to come in for a complimentary consultation, a portfolio review. You have to be one of the first 10 callers calling in to 833-652-7829. We have to take a very short commercial break, but when we come back, I'm going to talk to Stewart so much more in depth about current market conditions and taxes in the future. Stay tuned.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He is co-founder of Asset Preservation Tax and Retirement Services. Stewart, a wonderful show that we're having today, talking about a variety of topics, talking about taxes, planning for the future if they're going to go up. Wanted to talk to you more in depth a little bit about portfolio, if you will. How important is it for someone to be diversified, and why?
Well, like we said before in the previous segment, diversification is everything. And most people have no clue how diversified they are. And so in our complimentary portfolio review, we take a really deep dive view of the actual investment diversification. But what oftentimes isn't reflected in those analyses are that a perspective risk there. And what we mean by that is when we talked about different perspectives in the market, you just need to make sure, and I can't emphasize this enough. I know I talked about it earlier, but it's really important to make sure that you have a new set of eyes on your portfolio. So every once in a while, you should get a second opinion about what kind of risks you're taking, what kind of fees you're paying to your advisor, and what are they earning as a result of those fees, and what are you paying for? What are you getting?
Yeah. I have to also ask you, I know a lot of people have questions about taxes right now, Stewart. Can we talk again in depth a little bit about the difference between tax preparation, tax planning?
Right. Well, tax preparation is just about filing your taxes between February and April 15th or whenever you decide to extend till. Well, If you are getting tax advice during the tax season, when these people are working 12-hour, 14-hour days trying to get hundreds of tax returns done, that's a huge mistake. Now, we're going to do, I think, 729 we've done so far this year, tax returns. That's a lot. And, these people are under a tremendous workload. Well, we have a nice double check, triple check process at our office where we have an enrolled agent that does the interview, a certified tax preparer doing the data entry, and a CPA doing all of the review. So we're very confident that our tax returns are accurate. But the magic happens with the tax planning. Now, tax planning is done after the tax season's over. Typically, the most aggressive part of our tax planning is done in November and December. For example, if we decide to look at doing a Roth conversion, does it make sense for you? Well, you may have friends at work that say, hey, if you're not in a Roth, you're crazy, or why would you, pay the taxes now? You're going to get all kinds of different points of view. And quite honestly, it's important to get a professional perspective, somebody that isn't just a financial advisor, but also a tax advisor as well. And that's the nice thing about asset preservation, is that we have access to full-time staff year-round that can help us with our tax planning. So, generally what happens is you'll go to your advisor and say, hey, I've heard about a Roth. Why don't I do that? And he'll say, yeah, I think it's good. And you're okay, well, how is it good? Show me how it's good in my case. But a lot of these big box firms are prohibited from doing any sort of tax advice, right? There's tons of disclaimers. They do not take tax advice, or we do not give tax advice, seek counsel, etc. Well, the nice thing about asset preservation is we have all that staff in-house that can handle the tax side of it as well. And remember, brokers and other financial advisors are trying to do the least amount of work necessary to get their paycheck. And, sometimes that's why they won't even suggest, Roths.
Sure.
Sure. Because if you're in an IRA, and you start taking distributions in retirement, well, you start realizing, oh my gosh, this is affecting the tax on my Social Security. Well, remember, the reason most advisors aren't saying, hey, let's convert all of this to Roth now is because even if it makes sense from a tax perspective, let's pretend that the financial advisor manages $100 million on their book of business. And then they come to you and say, and they go to every client that has an IRA and they say, hey, let's convert this all to a Roth. Well, if they lose 24% to taxes, right, that advisor just gave himself a 24% pay decrease. Why? Because there's less money to be managed because they're paying taxes with that money. So there's a lot of pressures on advisors that we see where, you just want to make sure you're dealing with a fiduciary that can handle taxes, estate planning, financial planning, retirement planning, a true holistic planner.
Absolutely. And that's the most important thing, holistic planning, Stewart.
Absolutely.
I know you have a very special offer that you want to present to the viewers at home today. Let's talk a little bit about what that is and then open the phone lines.
Sure. Well, today what we're offering is the complimentary portfolio review. And in that portfolio review, what we're going to do is we're going to take a look at what your tax implications are moving forward, if there's any sort of hidden tax problems out there, what kind of fees are you paying, and what kind of risk are you taking? I think in today's market, it's essential to really have a good idea of where you are. And all you have to do is call 833-652-7829. We'd be glad to give you a second opinion.
Stewart, thank you so much. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We know you have a lot of questions about how to retire comfortably, how to retire with confidence. Stewart is offering you the opportunity to call in today for a complimentary consultation, a second opinion, if you will. Once again, 833-652-7829. We have to take a very short commercial break, but don't go anywhere. When we come back, I'm going to talk to Stewart a little bit more in depth about hidden fees and how to know if you're paying too much. Stay tuned.
This is the story of how you get from here to there. Right now, you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis. He is co-founder of Asset Preservation Tax and Retirement Services. Stewart, a wonderful show that we're having today and talking about a variety of topics all going around planning for retirement. We talked a little bit in the prior segment about fees and hidden fees, and I know that you had a client that came in recently who thought that they were paying 1%. Can we talk about that a little bit?
Sure. So when he came in, you know, we're used to hearing the answer of, no, I have no idea what I'm paying. You know, we're about a half and half. We see them both. But I had a client that said, hey, I'm paying 1% in fees. And you know, I said, okay, well, let's take a look. We did the portfolio analysis. And what do we see in there? We see all kinds of hidden fees. There's transaction costs. So anytime something's bought and sold, there's costs there. Sometimes these accounts aren't wrapped. So any transaction actually generates money for, you know, the custodian. There's 12B1 fees, there's loads in there, etc. So it's really important to make sure that, you know, you understand exactly what kind of fees you're paying. You want to make sure all those hidden fees are out in the open.
Sure, because a lot of times, like we've talked about, people have no idea until they're coming in to sit with you. So let's go back and talk about why it's important to be working with a fiduciary once again.
Well, when it comes to, you know, the minimum standards for a financial advisor, a fiduciary is number one. You need to make sure that you're dealing with someone that is a true fiduciary. But what we mean by that is that there are no undisclosed conflicts of interest. So there's a lot of big box shops out there that are selling portfolios, and let's just say they're managing it at 1%. Well, there's a company out there that I'm talking about here that has, you know, big in the 401k field, big in the IRA field, and their whole goal is to move you from a 401k to the IRA when you're retiring or when you're near retirement. Once you turn 59 and a half, you're allowed to do what they call an in-service rollover to an IRA, which is a great opportunity for many people. But this specific company I'm thinking about here basically has a really great 401k system, but once you move over to their advisory side, all of a sudden the same funds that you could have gotten in the 401k for, you know, 0.2% are now paying 1.2% plus a 1% advisory fee. So are you really only paying a 1% advisory fee because that's all that's being disclosed? What if these funds are adding another, you know, undisclosed compensation package to the back end of the firm? Because that's how a lot of these guys get paid.
Wow.
Yeah.
So basically with the holistic approach to it, we're looking at many different venues, if you will. We're going to talk about estate planning. You're going to talk about taxes, retirement planning. What else am I missing? Long-term care?
Well, so, you know, you need to make sure that your financial advisor is that holistic advisor as well.
Yeah.
And we've had the same relationship with the same estate planning attorney for 15 years. It's been awesome. It's an exclusive relationship, so it's a really neat thing. So estate planning is crucial to make sure your assets are passed cleanly. But we also look as a holistic planner at taxes, right? Like we've said before, we look at the investments. It's important to look at investments and taxes and estate planning, but also insurance and retirement planning and cash flow analysis. All of those things are important. It's really important to make sure that there's no stone left unturned when doing your financial planning.
Absolutely. And I know that you offer your clients so much. Let's talk about some of the concierge services, if you will. How often can they expect to hear from you?
So we are available all the time. We like to make sure that we're being in front of the client at least once a quarter. Now, during COVID, it was a little weird because, you know, people don't want to meet in person or we're doing Zoom meetings, but we really do try to make that contact at least once a quarter. In you know, full disclosure, it was a little weird during, you know, that period of time during COVID. But we also make sure that, you know, most of my financial clients actually have my cell phone number so they can reach me. I don't care if it's 11 o'clock at night on a Saturday. You may be getting a weird answer if you call at 2 in the morning, but I'm available. And if we're managing people's life's work, we want them to know that they can always reach us. And look, I'm busy and I get that, but if they can shoot me a text message or an email or whatever means of communication they're comfortable with, we need to make that available to them.
Stewart, is it ever too late to get started on a plan for retirement?
No, I think it's even more crucial, for the people that are nearing retirement or actually in retirement. So, when oftentimes we'll be asked, who is your ideal client? Well, I would say that our ideal client is someone that's, 57, 58 and older, that is, saved $250,000 or more, because that's really the people who benefit most from our planning.
Yeah.
Why? Because of estate planning and legacy planning and tax planning. Remember, we're more than happy to give advice to people, whether you hit those thresholds or not. But the people that really have those higher net worth portfolios are really the most vulnerable when it comes to these changes in tax policy and the volatility we're seeing in the market.
Stewart, I have to ask you, if someone is coming in for the complimentary consultation, how much time do you spend with them on the first visit?
Well, on the first visit, we like to set aside an hour and a half. Now, the meetings usually take about an hour. And the whole purpose of those meetings is first to discover whether or not we're the right people for you, right? And whether you're the right people for us. It has to work from a chemistry perspective. People ask me all the time, how is it that you work 6 days a week? You're always working on Saturdays. You're working these long hours. The reason it's easy, because I hang out with people I like. I work with people I like. And you need to make sure that there's two things that you have with a financial advisor. Number one, you trust them.
Yeah.
Number two, you like them. Now, if both of those things aren't present, it's kind of tough to have a relationship because you don't really want to talk to somebody you don't like. We have a very casual relationship with most of our clients where they can call me on my cell phone and text me. And, I've got clients that were making fun of me. They're all from Milwaukee, and they're making fun of, our Phoenix Suns losing to their deer or bucks. And, but they're casual enough to be able to have those conversations.
Stewart, thank you for another amazing show this week. To the viewers at home, most specifically, thank you for spending time with us. The number to call is 833-652-7829. We know you have questions about retirement. Stewart has the answers for you. Be safe, be happy, be blessed. We'll see you back again next week.